Have you ever wondered about the safety and liquidity of money market mutual funds? Let's start by unraveling what we mean by money market mutual funds. These are specialized types of mutual funds that invest in extremely short-term, high-quality instruments like treasury bills and commercial paper. They are often considered a safer option than most other types of investments, which makes them particularly appealing to cautious investors. But why are we interested in these funds? Well, in the world of investing, they serve a very crucial role. They provide a haven for your money, a place where it can grow, albeit at a slower pace, but with reduced risk. They act as a parking space for your cash, allowing you to earn returns while you decide where to invest next. However, like with any investment, there are two main concerns that any potential investor would have: safety and liquidity. Safety, in investment terms, refers to the assurance or guarantee that your investment will not lead to a loss. This is a major concern for many, especially those who are new to the world of investing. No one wants to see their hard-earned money disappear into thin air. Liquidity, on the other hand, is the ability to quickly convert your investment into cash without a significant loss in value. It is about how easily you can access your money when you need it. When it comes to money market mutual funds, these two factors, safety and liquidity, become even more crucial. After all, these funds are often where investors park their money temporarily, expecting not just safety and stability, but also the ability to withdraw their funds at a moment's notice. So how do money market mutual funds fare on these two fronts? Are they as safe and liquid as they are often made out to be? Or do they carry hidden risks that investors should be aware of? In this video, we delve into the world of money market mutual funds, exploring their safety and liquidity. Stay tuned to learn more. First off, what exactly are money market mutual funds? Let's break it down. Imagine a pool of money contributed by various investors. This pool is then invested in a variety of highly liquid short-term instruments. This is the basic concept of a money market mutual fund. These funds are managed by professional fund managers who invest in instruments like treasury bills, commercial paper, and certificates of deposit. The goal here is to provide investors with a safe place to invest their money, while also offering a return on their investment. The term money market might sound a bit confusing, but it's really just a fancy way of saying cash or cash equivalents. These are investments that are extremely safe and can be quickly converted into cash. Now let's talk about the mutual fund part. A mutual fund is an investment vehicle that pools money from many investors to invest in a diversified portfolio of assets. The key word here is diversified. Because the money is spread across various types of investments, the risk is mitigated. If one investment doesn't do well, it's likely that another one in the portfolio will balance it out. The short-term aspect of these funds is another safety feature. These funds invest in instruments that mature in a short period of time, typically less than 1 year. This reduces the risk of price fluctuations and maintains the fund's stable value. So, in a nutshell, money market mutual funds are a type of mutual fund that invests in highly safe, liquid, short-term instruments. They are designed for investors who want a safe place to park their money while earning a return, and they are especially useful in uncertain economic times. They offer a high level of safety due to their investment in low-risk, short-term instruments, and their diversified portfolio further reduces risk. Plus, their high liquidity means you can easily convert your investment into cash when needed. So, that's the basics of money market mutual funds, but how safe are they? Let's explore this in the next scene. When it comes to any form of investment, safety is a top priority. So how safe are money market mutual funds? Well, to put it simply, money market mutual funds are generally considered to be one of the safer investment options out there. But what makes them so safe? The key lies in their investment strategy. These funds primarily invest in high-quality, short-term instruments such as treasury bills and commercial paper. These are debt securities issued by governments and corporations with strong credit ratings, meaning they're highly unlikely to default. Furthermore, the short-term nature of these investments also contributes to their safety. Short-term securities typically have maturities of less than a year. This means that the money is not tied up for long periods, reducing the risk associated with market fluctuations. In other words, money market mutual funds are less vulnerable to the ups and downs of the market compared to long-term investments. However, as with any investment, it's important to remember that there are no guarantees. While money market mutual funds are considered low risk, they are not risk-free. Factors such as Interest rate changes or credit rating downgrades can still affect the value of your investment. Also, it's worth noting that the safety of money market mutual funds is often reflected in their returns. Since these funds invest in low-risk securities, their returns tend to be modest when compared to higher-risk investments. So while they offer a safer investment option, they may not provide the high returns that some investors seek. In conclusion, money market mutual funds are a relatively safe investment option due to their investment in high-quality, short-term instruments. They offer a way for investors to potentially earn returns while keeping their risk levels relatively low. But like all investments, they come with their own set of risks and are not entirely risk-free. So, money market mutual funds are relatively safe investments. But what about their liquidity? Liquidity is a crucial factor to consider in any investment. How do money market mutual funds fare in this aspect? Now that's a question that deserves a well-rounded answer. Money market mutual funds, as you've already learned, invest in short-term, high-quality instruments, such as treasury bills and commercial paper. But their true appeal lies in their high liquidity, which sets them apart from other types of funds. Let's delve a bit deeper. Liquidity, in the simplest terms, refers to how quickly an asset can be converted into cash without affecting its market price. In the world of investments, liquidity is synonymous with flexibility. The higher the liquidity, the easier it is for investors to buy or sell assets without causing drastic price changes. So how do money market mutual funds stack up? Exceptionally well, I must say. They are designed to be highly liquid, primarily due to the short-term nature of their underlying assets. This means that investors can easily buy or sell these funds on any business day without worrying about causing significant price fluctuations. But there's more. Money market mutual funds also offer check writing privileges. This feature allows investors to write checks against their fund balance, providing an additional layer of liquidity. So whether you need cash for an unexpected expense or you wish to move your money into another investment, your money market mutual fund has you covered. However, it's important to remember that while money market mutual funds offer high liquidity, they are not immune to market risks. The price of the fund can fluctuate based on interest rate changes and credit risk of the underlying securities. Therefore, it's always wise to keep a diversified portfolio and not put all your eggs in one basket. In a nutshell, money market mutual funds offer an attractive combination of safety and liquidity. They provide a parking place for your cash, while giving you the flexibility to move your money as and when you please. So, money market mutual funds offer both safety and liquidity. But what are the key takeaways? Let's find out in the next scene. Let's recap what we've learned about the safety and liquidity of money market mutual funds. We've journeyed through the realm of money market mutual funds, unraveling the intricacies of this form of investment. We began by exploring what these funds are, diving into their core, understanding that they are mutual funds that invest in short-term, high-quality, and low-risk securities. We then delved into the safety aspect of these funds. We learned that money market mutual funds are considered one of the safest types of investments due to the high-quality short-term securities they invest in. They're regulated by strict rules set by financial authorities, which limit the risk involved. However, like all investments, they're not entirely risk-free. We talked about the potential risks, including interest rate risk and credit risk, and the importance of understanding these before investing. Next, we moved on to the liquidity of money market mutual funds. We discussed how these funds offer daily liquidity, meaning you can buy or sell your shares at any time. This feature makes them an excellent choice for investors who need to access their money quickly. But remember, the ease of access does not mean you should treat these funds as a checking account. We also highlighted the importance of diversification in investment. While money market mutual funds are relatively safe and liquid, they should only form a part of a well-diversified investment portfolio. Diversification helps to spread the risk and can lead to better returns over the long term. And finally, we emphasize the importance of doing your own research before making any investment decisions. It's crucial to understand your financial goals, risk tolerance, and investment horizon. It's also recommended to consult with a financial advisor if you're unsure. So, there you have it. Money market mutual funds, a safe and liquid investment option. Remember, always do your research before making any investment decisions.